Hey everybody, I'm Joy Bailey. I am the mortgage boss. And this episode is going to talk about a few reasons why people should not buy a home. So I know a lot of times I'm always talking about like buy a house, who should buy a house, get qualified. But I actually was having a conversation with a friend of mine, and he makes plenty of money. And when I say plenty of money, like I want to give context, he makes like $250,000 a year, and he refuses to buy a home. I cannot convince him that it is a good idea. And he really laid it out for me and was like, well, Joy, it ain't for everybody. And he kind of explained to me why he didn't feel like it was something that was meant for him. And after reflecting on the conversation and really thinking about it, there's different seasons that you go through in life, and so it might be a season where it's not for him right now. Your seasons could be you don't have children. Now you do have children. Now you're married. Now you're divorced. Now your kids are in college. Like you have various seasons in life to where some seasons that home ownership makes sense and some seasons where home ownership does not make sense. So I just want to touch on a couple of things real quick. And I hope I don't offend anybody. It's in no way like designed to. So pardon my examples. I'm not talking about you personally. I'm talking just in general. Okay. So low credit scores. Home ownership is probably not for you if you have a 400 credit score. You have encountered some really bad luck, or you just don't care. If you're in the 400s, you know that you're in the 400s. You know you haven't paid anything one time. If you are in the low 500s, same thing. You should already know your habits in repaying debt to know whether or not your credit score is good or not. If you are kind of on the line and you're not really sure where you stand with your credit, I would recommend going to myfico.com. You will have to pay for it. I paid for the service personally when I was getting my home, and I wanted to be able to monitor and follow my credit scores that were going to show up on a mortgage report. Go to myfico.com. That's the scoring model that we use. We do not use Credit Karma. And that will provide you with the credit score that we would use to qualify you if you were to apply at that time. So please, 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 if you have a very, very low credit score, now is not your time. You are more than welcome to apply, though. We will never discourage you from applying for a home loan regardless, but just know that we don't have loan products for certain credit scores. Generally speaking, we won't have products for someone below 580. Is it possible? Sure. Is it probable? I don't know. But just be mindful of that. The next thing that I want to touch on is no down payment. Sure, you can go and get a down payment assistance program, but as I mentioned in prior episodes, combining no money and bad credit is a lethal concoction. So if you're going into a home and you don't have money for a down payment, or you don't have money to cover your closing costs if you're seeking down payment assistance, perhaps now is going to be your season where it is your saving season. The spirit of saving, the spirit of cutting back on excess items to allow you to generate or create more assets in your savings and checking accounts is potentially where you need to be. Buying a home is something that does require money, whether you're getting down payment assistance or not. It requires you to have money for different reasons. I would, again, be more than happy to take your loan application if you don't have any money. But when we finish the loan application and you don't have any money, we would have just wasted 30 minutes. So try to have money to cover, your closing costs or your down payment. And when I say money, I think I've touched on this before, but I'll touch on it now. You need to have some thousands, not I got $1,000 tax refund. Like, you need to have some money. If it's a $250,000 home, you need to have, about 3%, 4% saved to cover your closing costs in the event that you will be getting down payment assistance. And your credit score, it is a minimum credit score to be able to get the down payment assistance. So just something to think about there. If you know that going into this home is going to deplete all your money in your bank account, you may need to hold off a little while longer and save up a little extra money, because you're going to need money to do other things after the transaction is complete. You might need to purchase some things. You got to pay to move. I've touched on this in the past, but it's maybe not be your season if once you've written that check, you got, $40 left in your account. This is a very serious transaction, and it can be a very expensive transaction. I would certainly welcome the opportunity to have a conversation with you about the expenses that you should be prepared for. If that's something that you would like. I'm trying to couch my words very carefully, because again, I don't need the internet police saying that, I was being mean. But again, I mean, the one thing that you're going to find on here is, I will always say, you can't buy a house with no money. So if you're going into a situation where you don't have any money left over, that's practically the same thing. You need to be able to have some funds left over, whether it's required by the lender or not. It is a recommendation that you not deplete all of your assets to get into the property. And then the last thing that I want, well, a couple things. Two more. One is, if you move around a lot, it's not for you. Yes, you can, occupy a place. Let's say you buy a home, you stay in it for a year. Maybe you have a job to where you have to travel and you're in a different state every year, or you're back and forth somewhere. If you have the resources to, maybe potentially get a property management company to look after the property while you're gone, that is a great idea. I personally have never had a tenant before, so I don't know. I am totally speculating. I am not the person to talk to about investment properties, because I don't have an experience with investment properties. But if you're somebody that moves around a lot, and you here, you there, and you're everywhere, homeownership may not be for you. It might not be your season right now. Don't feel pressured by what everybody else is doing. It can feel, like there's a lot of propaganda out there. Everybody's doing it. A lot of people are doing it, but it may not be for you to do right now. And it's perfectly okay if it's not. The last thing, and I'm done. Homeownership is probably not going to be for somebody that has a high debt to income ratio and low income. I don't want to say what low income is, because I don't want anybody to have their feelings hurt. But I will say this. All of our debt calculations are calculated based on monies before taxes. So if you do an FHA loan, and the maximum you can go to is 55%. Yeah. If you are a good high wage earner, let's call it $10,000 a month, and you max out your debt to income ratio to 55%, that means that you have, including the mortgage payment, about $5,500 a month in bills that you have to meet every single month. $5,500. Okay? You still got $4,500 left to play with. You can do a lot of fun stuff with $4,500. You know, like if something breaks, you could go and replace a whole refrigerator if you got extra $4,500 left over every month. This is going to be a very extreme example. If you earn $2,500 a month, I pray that does not offend anybody, because I'm not here to offend you. I'm just trying to use a number. If you earn $2,500 a month and 55% of that is your debt, I don't know how you're going to have any money left over. Once you tack on expenses like food, expenses like I don't know, daycare bills, gas for your car, I don't see it. Let me see if I can. I'm going to type it up. Give me 1 second so I can add this up real quick. So $2,500 a month. And if you go up to 55% for your debt to income ratio, that is $1,375 a month in bills. Chances are you're probably in an area where that's gonna really probably be like maybe not even a $200,000 house if you're just doing a minimum down payment. I can tell you that this would be challenging. So if that were the case and you only have, $1,100 left, and you won't have $1,100 left because, like I said, it's taxes. Living off of that is going to be difficult. You haven't paid the light bill. You haven't paid your cell phone bill. You haven't paid the gas bill. You haven't gotten the grass cut yet. There are a lot of things that have to come out of that money. So what I'm saying is, if you have a high debt ratio and lower income, it can be extremely difficult to live. So what I would suggest is maybe now wouldn't be the time. But we would never tell you that you can't apply. We're more than happy to take your loan applications, and I'm more than happy to get you to a realtor to help you find a property. But it's just something that I would encourage you to think about when you're applying and we're going through those options. I don't want anybody to be in scenarios where they are going to be uncomfortable month after month after month after month. So think about all your expenses that you have and consider the fact that hopefully you're going to have money to be able to enjoy where you live, and you're going to be able to really, truly make your home ownership work for you and you not work for your home ownership as much. I hope this information was helpful. Please reach out to me and talk to me about your scenario. Y'all have a good day.